I think the key issue, as this chart shows, is that we still expect the level of GDP to converge on that old forecast, and that's largely because certainly in the case of the US and in China, that was about bringing forward demand rather than just being a brighter outlook per se. But nevertheless, good news over the last year at a global level. But one thing that didn't really surprise us last year was the fact that inflation came down pretty much as expected. You look at the second half of the year, with the economy holding up a little bit better, some volatility in commodity prices, there was a little bit of stubbornness in inflation. But I think the big picture is that we're pretty much seeing the disinflationary story evolve as we'd set out about 15 months ago. In fact, if anything, our forecasts for inflation at the end of this year are only about 0.5 percentage point higher than they were 15 months ago, which, given the cumulative price rise over that period, I would say is actually a pretty small difference. And the good news, in a sense, doesn't stop there, because if you look at surveys, they certainly point to a loss of momentum in the global economy, but they also point to the fact that that loss of momentum is probably stabilised and stopped. So on the services side of the economy, surveys certainly point to a fallback in activity, but growth in that activity is pretty much stabilised in the last 4 months or so on the service side of the economy. Industrial, clearly struggling, but certainly not getting any worse. So, so far so good. This is a pretty optimistic outlook, certainly not as dire as perhaps economists and markets have been expecting over the course of the last 15 months. And certainly there are reasons to be optimistic as well about the year ahead. Since October, when we've seen the peak in long-term bond yields, actually bond yields have fallen back quite substantially. 100 basis points in the 10-year Treasury, 70 basis points in the UK, gilt at the 10-year maturity, and in Germany around 60 basis points as well. So a big fallback in discount rates, which has helped to really see a rally in risky assets, and that should help the economy via wealth impacts.